When it comes to these soaring energy prices, how well placed is Qantas in terms of what happens beyond the hedging strategy by the middle of this year to be able to cope with potentially an elongated period of higher oil prices?
Yeah, well, thank you for having me and thank you for the question. What I would like to start with is actually, as you mentioned, that Qantas does have a hedging strategy in place, and that has actually placed the group very well in the next 6 months through to June, where we have our oil exposure is 90% hedged. And that actually means that the Qantas group is not being impacted in this short-term price in the fuel price. And that is probably very different to what our competitors have in place right now. So if we see fuel prices continue to stay as high as they are heading into the end of this year, the way in which Qantas has historically managed higher fuel prices is to recover that through higher fares. And what you need for the conditions of that is you need strong underlying demand, and also you need relatively stable and rational capacity. And right now we are seeing that. We're seeing when markets are open, when border restrictions have been removed, we're seeing very strong leisure demand coming across both our domestic and our international markets. And we're also seeing strong recovery in leisure and also corporate travel. So we're feeling optimistic that the group is very well placed to be able to recover the cost of fuel if it stays at the levels that it is at the moment.
As you point out, it is a nascent recovery with, more than a hint of fragility to it, right? Particularly with international borders having just really reopened. Is Qantas well placed to kind of deal with this latest geopolitical energy crisis? And does that mean, given the uncertainty, you're putting any capex or major expenditure investment decisions on hold for now?
Well, what we are seeing is that our major markets for international are open, so the UK and the US, but also for the first time in a long time with Western Australia opening on the 3rd of March, all of our domestic markets now are open without restriction. And what we're seeing through our market research with customers that the intent to travel both domestically and internationally in the next 12 months is as high as it's ever been. And we're seeing very strong recovery, as I mentioned before, in terms of underlying demand, both leisure and corporate. So we're feeling very optimistic. We are not putting any capex on hold at this point in time. We are making some significant decisions in this half regarding the replacement of our domestic narrow-body fleet, and we are currently reviewing the case for Project Sunrise, which is our ultra-long-range aircraft to serve the east coast of Australia to New York direct and also to London. So in terms of the way in which the group is positioned, we're feeling very confident, both in terms of just the demand, but also I think the other thing we're seeing is a very strong performance against our transformation targets. We're taking $1 billion of cost out, and we're ahead of track on that regard. And our competitive position domestically is extended versus where it's been in the past.
We talked about costs in terms of oil, but what about staffing and retention of your workers? How are you positioned when it comes to keeping staff now that you're trying to really get back to business after COVID?
Absolutely. So we've actually got all of our staff now stood up and back at work, which is a fantastic position to be. It gives us a lot of resilience and it gives us a lot of agility to respond to different demand environments that we're seeing. But also, I think we've announced as a part of our half-year retention payment and reward that we are providing to all of our staff 1,000 shares that will be provided to staff at the end of 23, as long as 3 conditions are met. And we think that that is an important thing for retention, but also a very important part of rewarding our staff for their loyalty and incredibly hard work over the last 2 years.
Does that include executive level employees, and how much pressure are you getting to increase those pays as well?
Yes, that does include executive employees as well. And I think that we're seeing some incredibly strong loyalty across our executive ranks, albeit that we have seen some executives leave the group. But the depth of talent across the Qantas Group and Jetstar Group is very deep. So we're feeling very confident that we've got both the operational staff and the executive staff that we need to take us through the next final phase of our recovery.
Vanessa, your profile has been increasingly more public-facing within the company. If Alan moves on next year, mid-next year, could you be vying for the top job?
Well, I think that's, Alan is still here and that is a decision for the board. There are a number of candidates that are competing for that role, but if the board were to give me the opportunity to step into Alan's shoes, I would be incredibly honoured and proud to do that. So we'll see how that goes over the next 12 months.